We are really lucky to have you on these spaces. A lot of us are fans up here. I really do kind of just want to jump right into it. How you're feeling about the market on the macro front, the Fed, bank crisis, all that stuff.
Sure. I mean, I think maybe just setting the table, where we are today really started back in 2007, 2008 words, but back in that 07, 08 period, you had a ton of bank failures, and it just accelerated as time went on. You had 25 failures in 08, and then after you passed TARP, a $700 billion troubled asset relief program to kind of help the banks out, that bank failures went from 25 to 140 in 09, and then went back up to 157 bank failures in 2010. And so the upshot of that is tons of balance sheet expansion by the Fed. And every time the Fed has tried to wean you off of that, the stock market has had a temper tantrum. 2011, 2015, 18, even 2020, and then obviously recently in 2022 with the peak there. And the upshot is you can stimulate, hand out tons of stimulus checks, do all of that if there's no inflation. Because inflation, the problem is for that percentage of the population that doesn't own stocks, and so that's about 45% of the population, and that doesn't own a home, and that's about 35% of the population. For those people, they don't get the benefits of asset inflation with your stocks going up, et cetera, or your home prices going up. They're just getting killed when they go to the grocery store, have to fill up their car, pay their rent. And so when you have inflation, you got a problem, and then the easy money has to stop. And that's unfortunately where we are today. And a lot of the things that made inflation stay low, so you could go ahead and hand out all of that easy money, has reversed. So China had their population decline for the first time in 60 years. It really started with their one-child policy. So all that cheap labor in Asia, that's going away.
What are some themes outside of unprofitable tech that you find interesting to set up short positions? And what drove you to ramp up your short positioning back to 40% from 5% earlier in the year?
Yeah, I think stocks trading below cash. I mean, I'm looking at some right now and trying to think about, all right, is this a melting ice cube? Because a lot of them are. They're just value traps, or is this something where it's worth looking at? And people may forget, but Apple back in I want to say like 2001 or 02, they were actually trading below cash on the balance sheet at one point. So stocks always go lower than I ever imagined humanly possible. And they always go higher, like with GameStop, than I ever imagined humanly possible. And so that's just something, you sort of you kind of live with, but then you kind of have to figure out, is there an opportunity here? With where I'm putting my shorts on now, part of the reason is that, it's been a very uneven earnings season. Some companies have done well, others have done poorly, and they're the same exact space. You can look at, or it's when they reported, right? One guy reports first, it's not so bad. The next guy reports, like Amazon. Amazon Web Services is absolutely, much worse relative to Google Play or Azure. And so that stock gets hit a lot harder. But to your question specifically, the thing I'm noticing right now is a lot of cloud consumption-based software stocks. Some of them have put up some pretty solid results. And what I've learned over time is typically it's just timing. For me, I'm looking at the names in software that are in there where the stocks have rallied hard off of results, and where I go, well, either Amazon Web Services is really going to accelerate from here, in which case I'm going to get paid off in having bought Amazon. And quite honestly, I bought Amazon despite that. I bought it for their retail business.
Yep.
And I was like, all right, I can hedge some of that by putting on shorts in the other companies that are related.
Wayfair and other companies. Yep.
For me, a lot of times, if a stock's gone pummeled into earnings, I cover my shorts or I cut them way, way back. And then, because I know if you get a short covering rally, you're going to get your face ripped off. And so I'd rather go after it after it's up 20, 25%, 30%. And everybody's excited because they said AI on the call like 50 times. And so they think it's somehow immune. That's when I get really interested.
What's your view on the general banking crisis? I guess just some broader comments to close here so people can get a better idea of where you stand into the second half of the year.
So the second half of the year, to your point, I see multiple things happening. from a fundamental basis. First is that all the bank failures that we've seen so far, and by the way, the big banks are going to get assessed to cover the bankruptcies of First Republic and Silicon Valley Bank, etc., Signature Bank, and anybody else that might be coming. Obviously there's a lot of concerns around a couple of other smaller banks. That's just going to tighten the access to money between now and year end. It's already tightened. And as we talked about with commercial real estate, that's going to be a big problem as all of those companies have to refinance. And there's hundreds of billions of dollars worth of debt that needs to be refinanced. So to me, and then I see results like what Disney put up, and Disney's a good company, I think we can agree. And I go, the advertising markets was really bad. And advertising tends to get really bad as you're going into a recession. So from all of those points, that's why I'll be the first to admit it. I've been stunned that stocks have held in as well as they have over this last period of time. But having said that, if you go back and look at history, you have these rallies. They happen all the time. We talked about the global financial crisis. We talked about the tech bubble. And you can have these 20% rallies in the S&P, and they've happened in history. My general touchstone that I invest to is if the fundamentals are keep on getting worse, don't try to be a hero and somehow think you're bright enough to pick the bottom. And right now, fundamentals are continuing to get worse. And so for me, okay, maybe multiples keep going up and estimates keep going down and you luck out and you do well anyway, but I don't want to count on getting lucky to make money. And if estimates keep going lower, I want to stay the heck out of getting my head chopped off with valuations as high as they are. And that's why we have as many shorts as we have longs.
If you want more great ideas and education around finance, go ahead and hit the subscribe and like buttons.